All right. Hello and welcome everyone to today's live Q&A event. We're happy to have you join us. During this session, you'll have the opportunity to hear from our experts as well as pose questions of your own. Today, Charlie Miller from Q Solutions provider State National will be talking with Davi Allen about data transformation. Davi is Vice President of Consumer Lending at BCU and has over 17 years of credit union audit and lending experience. Her current role includes responsibility over consumer lending product management, sales, underwriting, servicing, and collections. Davi is recognized for her strengths in operational excellence, drive for results, and strong commitment to employee engagement and development. Charlie Miller is the Vice President of Client Services and Operations at State National. He oversees the relationship and service-focused client-facing team, as well as fundamental loan and insurance tracking operations. Charlie, I'll hand it over to you now.
All right, everybody. Well, thanks for joining us. We are excited to welcome Davi Allen, who was just so well introduced with BCU Credit Union outside of Chicago. Davi has a wealth of knowledge about how to identify and work with data in the credit union space, and she and her team have been doing some fun and interesting things related to that. At a recent meeting for our State National Client Advisory Council, she was sharing some information with all of us, and we were all kind of taken aback, like, oh, that's pretty interesting and impressive material. So we thought being able to share some of this in this Q's forum with this audience would provide a lot of value for those that are tuning in today. So again, thank you, Davi, for joining us today and taking the time to be here and to be open with sharing what you've learned at BCU to help some of our credit union peers start along the path, figure out how to take those steps and move forward. So I guess I'll just kick it off with an open-ended question. Can you let us know when and how you and BCU first got into looking at your data, mining the data for information and insights to help create efficiencies to help your members? Is kind of what got you started.
Yeah, thanks, Charlie, for the intro. So we got started at BCU really getting into data and using data to drive our strategies probably about 2 to 3 years ago. So one of our key strategic focuses for BCU is making sure that we're focusing on financial well-being for our membership. We serve a lot of company partners, large company partners, Fortune 500 companies, and one of the value propositions that we bring to them is really helping their employee base establish just a better financial health portfolio, making sure that they really understand financial services and improving credit where we can. So as we kind of embarked on that mission a couple of years ago, one of the things we wanted to make sure that we did was to make sure that our current product line really aligned with everybody who could be potentially a member, right? So what we found is that in the past, we had really been focusing on the credit-worthy members, your A paper, your B paper, and we really saw a gap with our subprime members. So in our efforts to develop a product that was more relevant to our subprime membership, we started looking at ways that we can underwrite loans using alternative data sources. So something other than a credit report. We know that when it comes to credit unions, especially credit unions that are tied to a person's employer, there tends to be a little more affinity and loyalty to paying us. And we saw that time and time again where, some members were having challenges with some of their other loans, some of their other lenders, but for whatever reason, they were always paying their BCU loan back. So we really wanted to focus on expanding and leveraging the relationships that we had with those type of members and being able to provide them with loans that they may not have normally qualified for. So that's kind of where we got started with our journey into lending and using alternative data models. So we have a data intelligence team on site. We have one data scientist that works on that team, and he was actually able to build a model that was purely relationship-based underwriting. So looking at things from the member's deposit history, transaction history, behaviors on the core. We were able to develop profiles for members that we felt, would make good on their loans without necessarily having the credit score to reflect that. So, that was kind of our first endeavor into alternative data modeling. We put that into place. We actually have a unsecured product that is 100% relationship-based underwriting. We don't pull credit scores. Instead, we leverage their relationship and the information that we already have on them to make a credit decision and to extend them credit. And it's mostly in that subprime sector. And so from there, that was kind of the tip of the iceberg. From there, we thought, how else could we leverage this data in other parts of the business? And at the time, I had just stepped into collections and really starting to explore automation and efficiency. And so we actually took a derivative of our lending model and built what we call our collections priority score. And this is the one that I had mentioned at our state national advisory board that gained a lot of interest. So essentially, the model will it will look at the member's behavior, look at past delinquencies, the types of transactions they have, the loans on profile, deposit history, what types of deposits they get. And it'll score them as to whether they are high, medium, or low risk. And then from there, what we do is we really focus on our high risk collections members. So these are the members that we know need help to pay back their loan or to identify options for solutions that they may need to get out of their hardship. So we tend to focus more of our collector resources on calling these members. We will call them sooner, we'll call them more frequently, and we'll be more aggressive in the solutions and the offers that we're providing to them, as opposed to, let's say, a low-risk member who are going to typically be the types of members that just self-service. We'll send them a text message, remind them that, hey, their payment is due, but really use more of a hands-off approach because they know, or we know, and they've shown that they're the type of member that will actually kind of take care of their own delinquency. So we don't really have to spend our time and energy reaching out to them with our people. Really just an email reminder for them is generally sufficient. So that's kind of the main things that we're working on now over the past year or two, seeing some really good results. And again, like on the efficiency side, it's been fantastic.
So how do you know that you're benefiting? What are the metrics that you look at? Is it just head count? Is it net promoter score or CSATs? What are the benchmarks that you look at to know if it's working?
Yeah, so on the origination side, it's volume based. So with our express loans, we look at the proportion of members that we would have approved or that we did approve that we normally wouldn't based off of their credit score. So that's a really good metric to monitor. On the collection side, we look at FTE avoidance. So we'll look at the model and we'll say how many more accounts can each collector handle versus where we were, a year or two ago. So that's one metric. The bigger metric on the collection side, though, is charge-off avoidance. So our goal ultimately in charge-off with collections is ultimately to reduce charge-offs. So we actually we're running right now a champion challenger where we'll actually split the delinquent population in half. The first half will follow the same normal strategy that we've always followed, which is, the loan will hit 20 days delinquent. We'll call out, we'll apply kind of the same resources, the same options, the same treatment to every account that we always have in the past. And then the second sample, the other half, which we call the challengers, will follow the new Q model. And at the end of each month, we'll look at the results and we'll see what the roll rates are and we'll compare to see, did we charge off less accounts using the new models than we did the old models? And so far, it's been really successful.
Excellent. So you mentioned you have a data scientist on staff. Is it a chicken and the egg kind of thing? You brought the data scientists in to start probing these items, or did it just kind of happen organically with someone on the inside? How do you foresee expanding that over time, et cetera?
Yeah, so our data scientist actually has worked for us for a while, but he was a data analyst. So he would just run reports in the past, and it wasn't until probably a couple of years ago where we started to shift our thinking from kind of a reactive analyst type mode, which is analyzing what has happened in the past, to more of a predictive model. So essentially, like, I would call him, I would say we converted him from an analyst to a scientist. Again, really good with data, but he's been doing a fantastic job. He builds probably about one model every 2 weeks, for obviously various areas of the business. He doesn't just work for me. But yeah, he's been, right now at this point, we're using the data. We're really trying to expand the uses of data, and predictive models throughout the business. I think the hardest part with using data intelligence to drive your strategy is really operationalizing it, right? So we have our scientists build the score, but then we have to turn around and do something with it. And that's where, we're a little bit more challenged. It's not quite as easy as it seems. With our collections priority score, it took about a year and a half before we could take the model that was built and actually put it into practice and really use it to drive our collection strategies. So knowing that, the using the data for strategy is still a little new to the business. It is taking us a little bit longer to actually operationalize the models. So right now, the one data scientist works fantastic for us. He's probably got more capacity than we can consume right now. But I would imagine that as the business gets more comfortable with using data, and people start to understand what it is you can actually do with the data, I think we'll probably end up exceeding his capacity and needing another one.
Thank you. You mentioned I asked that question because I think that the infrastructure of how it comes about is always something that people, companies, how do we start this process? How do we build that out? And I think there's internal, there's external, and I think maybe you guys got lucky. You had somebody who could step into that role. So good for you. I think it's probably safe to say that you're an early adopter of this within the company, and I'm sure you've not cured the credit union of all skeptics. How do you, as someone who's no doubt a champion of this sort of thing, how do you spread that mentality both up to your executive group? How do you spread it to your peers, to the front lines? How do you get buy-in?
Yeah, no, that's a great question, because I think when I first started talking about this, a couple of years ago, it's very new. It's somewhat intimidating. I've always been a lover. I love data. I love to, kind of push the bounds of what it can do. And I feel like I'm deep down when I'm an analyst at heart, but I think in the beginning, I think there were a lot of skeptics who thought that'll never work. You can't do that. And really, it's just a matter of trying it out. And I feel like once we started brainstorming the ideas for different ways to use the data, once we finally came up with the concept of our priority score, and started kind of talking more about it with the business, is where we really started to gain some traction. And at the end of the day, my thought was, it can't hurt. We could try it out. If it doesn't work, it doesn't work. But if it works, it'll be a game changer. So it was just a matter of, doing it on a trial basis. I think that once we started to dabble in it, we started off very slow. We took the model and I think we tried it on maybe 100 accounts at first, something very low risk. And once we looked at the results and said, there's something here, we're seeing a little bit better results than we had in the past. We expanded to 200 and then to 300, and slowly we started putting more people into that strategy. And after a couple months, the team they bought in, they saw what it could do. They saw the results. It's very quantifiable, the results that you can measure from, the success of the model. So I think once they started to see that, oh, wow, we're actually gaining more time, from our reps, they're able to have longer talk times, which means more meaningful conversations for our members. And still having fantastic results. So I think with that, we started to then just spread the word, hey, look what this collections model did for us, and really helped the business try to brainstorm, what can it do for your business? So I'm definitely a champion of it. In my own teams, we hold workshops with our member intelligence team to really just promote some of the models that have already been built. Talk about, here are all the different things that we can do with this model. And I really feel like it just opens up people's minds to, well, if it can do this for your business, what could it do for my business?
Yeah, it is interesting. It is interesting to see how, so the results speak for themselves. I think that's the way you sell it internally.
Yep. Exactly.
So one of the things that you and I had talked about in the past was, which I had loved, was the longer calls. You mentioned longer calls. I have responsibility over a contact center, and as part of my role, and the idea of longer calls terrifies me. But I think you explained it in a different way, and how it ties into your financial well-being initiative and freeing people up to have those kinds of conversations. Would you mind going into a little bit more detail on that?
Yeah, sure. So really our collections strategy over the past couple of years has shifted. Historically, our collections team has really been about dialing for dollars. So call members, get payments, move on to the next one. And as quickly as you can do that, the more members and, the more payments you can collect. With the introduction of technology and efficiency, especially with our new model, it's really designed to focus on the members that really need it. So by focusing on the high risk members and automating the strategies for the low risk members, we really free up a lot of our collectors' time, which means they're now able to really dive in a little bit deeper with, with these high risk members. So they're not just calling them to say, hey, you're late, I need a payment from you. They're actually asking, okay, why are you delinquent? What is your future, your next couple months look like? How can we help you? And really trying to troubleshoot and problem solve whatever hardship the member is going through. Because every situation is just a little bit different. And not every member can just make a payment. And sometimes that's not even the answer. Sometimes they need an extension. Sometimes they need a modification. Sometimes there's no end in sight, and maybe the best course of action is really to, charge off or repossess. So I never like those stories, but I think by allowing our collectors more time to dig into what exactly is causing the member's hardship and how can we work together, member and credit union, to help you get out of whatever situation it is that you're in. Sometimes it's 2 months, sometimes it's 6 months, and sometimes it's a couple of years. But our ultimate goal then becomes, let's help the member correct whatever situation they're in instead of just collecting the payments. And I think by automating, a lot of our communications for our low risk members, we're using text messages, we're using direct drop voicemails, emails, letters. We then free up the collector's time to allow them to have these longer conversations instead of saying, hey, it's been 5 minutes, you need to hurry up and get off the phone. Some members might actually need a half hour, but the half hour that you invest in that conversation could really be life-changing for the member. And they may not need to call the next month, to make a late payment, because we've actually fixed their situation and set them on a plan for a successful future.
Yeah, I love that. I think too often people associate data analytics or automation with a depersonalization. And it certainly can be that. And in some cases it should be that. But I think it kind of caught me that you guys are using it in a way that is improving that relationship, improving, the experience of your members, and hopefully straightening them out, and then continuing along that long-term relationship with them. So no, I love that. I thought that was interesting. So I think I'll get back to sort of the internal executive buy-in, that sort of thing. I think there really has to be a top-down. How have they embraced it? Do you now have your executive team is looking and saying, well, we can use that there, and we can use that there, and we can use that there? Are you starting to feel that, or is it you still expecting more of a groundswell push from your level and your managers?
Yeah, I mean, our executive team is bought in to predictive modeling, data strategies. I think they get very excited about the possibilities of really being able to leverage data in a different way to drive the business. I think as we come up with more and more ideas for models, building the models and really just showing results, it only improves that sponsorship and that push even more. So. It is one of our strategic pillars is to really be able to leverage data to drive the business. So I would say, we haven't really had any issues with pushback in that area. Yeah. Definitely a lot of responsive and supportive, feedback from our executive team.
So you've mentioned a couple of your programs, the collections program, the lending program. You also mentioned a couple specific items in the past, your express loans and your attrition model. Would you mind? I thought those were interesting. Would you mind just diving into what those were, just other use cases for that I think would probably be uniform across the credit union space?
Yeah, sure. So our express loan model is, as I had mentioned, it's an unsecured loan that is 100% relationship-based underwriting. So it's a completely automated process. So members can go online and they can fill out a application, which is actually somewhat pre-populated for them since we know who they are and we have their information already. It's a 60-second application. It takes about 60 seconds to return a decision. I want to say it's like 3 screens. We're just collecting some minimal information on them. It will then run a decision model based off of the factors that are housed on our core system. And as long as the members approve, we can actually disperse the funds automatically into the member's share within probably about a minute or two. So the entire process is actually pretty quick. And as I had mentioned, most of the people that are using it are subprime members. So again, it's a little bit higher delinquency than other products just based on the fact that it is more geared towards the subprime. But on a whole, it performs a lot better than what you would think for being a product that is, mostly taken up by subprime membership. So that's one, and that's where we are using, we're using the data to really leverage the relationship, really being able to approve members that wouldn't normally be approved, and then doing it in a very quick manner. That's the fastest loan that we can disperse it, today. So it's a really great experience for the members. The second one, which is a little bit different that you had mentioned, Charlie, is the attrition model. So the attrition model is actually a model that is used by our business development group. It will identify members who are more than likely to voluntarily attrite from the credit union. So essentially, they opened up a share with us, maybe put in their minimum balance requirements, and they don't use us. It's just sitting there dormant. After 12 months, we actually start to push the member towards dormancy and kind of close out their accounts. So the goal of the attrition model is to identify these members before their accounts get closed. It's actually a series of a couple different models. So the first model will identify the member that is heading towards dormancy. The second model will then look at their propensity and how quickly we expect for them to go dormant and to, essentially close their accounts. From there, it actually gets prioritized. And for the top 20 or so % of members, we will look at their behaviors. We'll look at, a lot of factors on their accounts and then determine what type of product could we give this member that would more than likely keep them from going dormant. So for instance, Charlie, if you were our dormant member, the model would know that, hey, I think Charlie might be in the market for an auto loan. Let's see if we can market to him an auto loan, because chances are if we can get him to take out the auto loan, he'll actually become a more engaged member with the credit union. So essentially the model is looking for, not just trying to save you, but trying to find a relevant product that you will need at whatever time in your life you're currently in. And then it works with our marketing team to then turn around and run a campaign that will be very attractive to you. So we'll actually pitch you your auto loan and provide some hopefully really attractive incentives for you to engage and hopefully take out the loan and prevent you from actually leaving the credit union.
Very good. Very good. And for the record, I don't know if I can find a car below MSRP these days.
Yeah.
I come out on the auto loan. Maybe HELOC.
Yeah.
So one of the things in my experience, having dealt with a few data analysis projects in the past, one of the things that always was a barrier is your data integrity. So you collect systems over the years with M&A and with core conversions, et cetera, et cetera. How are you guys working with that? Do you have a data governance steering committee and all that, or are you just kind of dealing with what you can deal with right now and some of those items in the future?
Yeah, no, we definitely very serious about data governance. We're doubling down. We have dedicated resources for data governance. I firmly believe the data is only as good as what you're working with, right? So if we're going to build models and use that to drive our strategies and drive our business, it better be accurate and it better be clean. And the only way you can do that is to have a governance process around it. So we actually, we're embarking on, and we're probably on about year 2 right now of a data governance strategy to really get more disciplined about how we manage our data, how we own who owns the data, how the data is used, making sure that it's used in the proper context. Because we all know, you can have some fields, but if you don't really understand what they mean and you start, using them in a way that's maybe not right, you're just going to get garbage for your results. So our data governance process really defines data owners and data custodians, 1, to make sure that the data is clean and accurate, but 2, to make sure that the users that are using the data truly understand how they're using it and they're using it in an appropriate way. So it's definitely a lot of work and a lot of components to it, but if we're gonna use the data to drive the future of our business, then you need it to be clean and you need it to be accurate. So
yeah, it's very, very very important and very difficult. I remember having conversations with people about 4 different people have 4 different definitions of the same word.
Yeah.
And it's like, okay, probably need to settle on this. So
yep.
Is there anything else you'd like to throw in there? I mean, I love this stuff. I love the fact that you're working to create efficiencies to improve your member experience. To it's and doing it in ways that I think are inevitably going to come down the line.
Mm-hmm.
If you haven't embraced it now, you're going to have to embrace it in the future. I think you guys are getting into it now. Is there any other insights or anything else you'd like to offer to the group? And then we can maybe go to some questions.
Yeah. No, I would just say, I think when you're just starting out, it sounds intimidating and it sounds like it'll be difficult to do, but I feel like, I think the key is just to get started. And I think that was really the hardest part for us, was just that taking that first step and figuring out, okay, where can we go and how do we even do this? And once you get it started, I feel like it just takes on a mind of its own. And people start coming up with new ideas, other ways that you can add to the model, make it better. So one of the things, with I mentioned our collections priority score, and it's taken a long time for us to kind of get that initial buy-in and actually start relying on it. But that's really just the first step. And I think that once we got the buy-in from the business and the team, they're already talking about our 2nd, 3rd, 4th, 5th step, so we're actually, going to build a model very similar to our attrition model, which is actually a series of several different models layered on top of each other. Our plan with collections is not to stop at who needs help. It's, when do they need help? How do they need help? Do they prefer a text message or a phone call? How do they like to interact with us? What's the best time of the day to call these members, to get in contact with them and respond? Do they work? Are they first shift, second shift, third shift? Like, when should we call them? And then really getting prescriptive about the types of offers that we offer them when we do contact them. So I envision in a future world, we'll be able to identify members who need help, know when to call them, how to contact them, and really what are we going to offer them right off the bat so that it can help their situation. So the more you know and understand your member, I think the quicker you can get to that solution for them, and the more relevant you can be for them in your conversation. So ultimately, I think the key is really just take the first step. We love champion challengers with everything that we do. It's always that A/B testing. Let's try the old way, let's try the new way, and see what outperforms. And then I think over time you'll get to see that it's really a fantastic thing, and there's so much you could do with it.
Yeah, and I think that's the champion challenger is a unique idea, because you have an idea, you have a hypothesis, until you're not going to implement that hypothesis unless you prove that it's true. And running those side by sides and understanding that it is true, I think when you start to embrace new processes, you start to embrace technology. Sometimes you win, sometimes you lose, and you got to be willing to cut your losses. You guys have probably come up with some models that didn't work. Yep. And I think that's a big, it's a big hill. People are afraid to fail when they do that. And I think you got to be willing for it not to work in order to do it. So. Yeah,
definitely. Yeah, we've definitely had the models that have failed. So it's not, not everybody can be a winner.
We're not building rockets here. So,
yeah.
Well, I think, not sure if we have a couple questions down there. I see a 2 on the chat box.
I have a question here. You were just mentioning about the failing before you make it work. So just kind of what things do you wish you had known before you started everything that would have helped things go smoother, and maybe you would have been able to fail a little bit less?
Yeah, I think, I think when we first started out, we thought that building the model would be the hardest part of this project. And it actually wasn't. Our data scientist, he built our model in 2 weeks. The hardest part was operationalizing it and really trying to figure out, okay, now that we have this score, how are we going to use it? And that's where we proceeded on what was a much longer journey than we expected. And I think at times we definitely got very impatient with ourselves, because we thought we have this score, we should be able to use it, and we should be able to use it right away. And that wasn't necessarily the case, as is with all things technology. Sometimes things just take a little bit longer than you expect. So, I wish that I would have known, early on, that it wasn't going to be as quick to operationalize as I was expecting it to be. Now I have a much more realistic idea of what it's going to take to actually use these models. So we're a little more forgiving with ourselves, but yeah, that would have saved me a lot of anxiety.
Yeah, no doubt.
Yeah, thanks. You and Charlie were talking earlier about the chicken and the egg. So do you think you need to have an idea of how you would use data science models before recruiting a data scientist, or would you recruit the right person first and then kind of brainstorm good use cases?
So, and that's a great question, because that's what I'm going through with my team right now. They don't think they don't all necessarily think they need the data, but when I actually tell them about some of the things that they could be doing, it's almost like, oh, well, I didn't realize that you could do that. And I think that unknown, you don't know what you don't know, right? So if I were to approach one of my managers and say, hey, you need to use data in your strategy, they don't know where to start. So what we do is we actually use the opposite approach. I have them think of a very painful process. And then we match them up with our member intelligence team, and we just brainstorm. all right, what are some things that you could do about this painful process? So we've come up with a lot of really good ideas that, I don't think they would have naturally come up with if you didn't help kind of probe them a little bit. So I think that's where your data scientist really comes in. But I don't even know that you need a data scientist to do that. You just need someone who knows what data could do. And that's really where I've helped to try to become the advocate for that. So I actually explained the attrition model that I mentioned to you. That's one of the things that I will tell all of my leaders, because I think that gives a lot of good examples of different ways you could use the data, and that really starts to get their mind flowing, and then they can start to think about, oh, well, if that's a type of thing that a model could do, I wonder if it could do this. And I find that they actually become more open-minded to the idea of using data once they hear some good examples.
Yeah, that's great. Another one here is obviously data privacy, compliance, things like that are high importance. So how do you handle that? Do you put safeguards in place? How do you make sure that your members feel like everything on their end is still secure?
Yeah. I think that's a really great point, right? Because if you get too personal, it's kind of like where the Alexa's always listening to you, and then people get a little paranoid about how much do you know about me? So we try to balance that a little bit, right? We want to be personal but not intrusive, and so that's one of the things where we're not directly outreaching to the member and saying, hey, I know you need an auto loan, or I know if you had an auto loan that you'd actually use this more. It's more just putting the suggestions out there. So I think that's definitely a good point. You've got to kind of balance the line with being too intrusive into people's lives. But we get a lot of comments from members that are more along the lines of, I know you know me and I know you have my data. Why don't you actually use it to be more meaningful to me? So part of me thinks, in this day and age, people almost expect you to use their data to be more meaningful to them. So I think as long as you're doing it in a responsible way, and you're not being intrusive, I think it's actually appreciated in most of the instances. And in terms of data privacy, we because we do all of this in-house, we have cybersecurity has been a huge focus for us over the last 5-10 years. I mean, I think it's a focus outside of data strategies. We're a financial institution. We need to make sure that everything is secure. So this is just another component of that.
Yeah, thanks. It is something I hadn't really thought, that most people now just expect that people have all their information. So yeah, do just use it in a way that helps me out, right?
Yep.
Obviously, this takes a lot of time and effort and probably someone dedicated to this. So how do you recommend smaller credit unions get started on this journey when they may not have the capacity to bring someone on to really dedicate time?
Yeah, I think there's external resources out there, external vendors that dabble in this stuff. I know that, we interact with some people now. Their models are different. We have some external business partners that put together models, obviously not based off of our member data, based off of more like credit bureau data, public databases. So you can find that out there, and it's very, I think it's becoming a very hot area. So I think we're going to see over the next year or two a lot more credit union QSOs and resources really getting into this space. And I think that's exciting, because I think that's really going to help all credit unions be able to leverage this without having to necessarily have the internal resources. I really get excited about these QSOs, because not only will you be able to use your data, you'll be able to leverage, kind of the combined knowledge and modeling that you gain from a QSO having data from multiple credit unions. So that's some of the things that we're working on. Even though we have our own internal data and data scientists on staff, that's really only one component of our data strategy. the second component is really leveraging third parties and, kind of combining their models with our models. Because the more you know about a member, both, internally and externally, I think the more relevant you can be to that member.
Yeah, if you have some of those resources that you were mentioning that you would like us to pass along in the follow-up email,
Sure.
you want to send those to me, I'd love to do that so that everyone else can take a look at them too.
Okay. Yeah, I wasn't sure if I was allowed to mention that. I didn't want to plug anybody without being able to. But yeah, there's definitely a lot of resources out there. And it's funny, I do a lot of monthly relationship meetings with our third party vendors and business partners. And that's always something that I ask, hey, what are you guys doing with data? How can you get that information to us so that we can leverage it? So actually after this webinar, I have a call with Experian, and that's always the standing topic that I have with them is, hey, what are you doing with data? What models do you have? And can you get them over to me? And they do. All of the credit bureaus have data models that you could leverage.
Yeah, thanks. Let's see. If anyone has any other questions, do feel free to send them in. I've got one last one here. Just kind of looking forward, where do you see the industry as a whole moving with leveraging data and using this well?
Yeah, I think, like I mentioned, I think there will be credit union QSOs that form with this particular service in mind. I think as an industry, we have to be smart about the resources that we're using, how we're doing it, especially when you factor in technology. Calling members, on the collection side, I know it's always a hot topic. People don't pick up the phone anymore. Contact rates are less than what they were a year ago, 2 years ago. More people are going to cell phones, more people are screening their phones. So I feel like we have to be smarter and more adaptable about how we run our business, and using some of the traditional methods that we've used in the past are just, they're not going to be as effective going forward. And you're already kind of starting to see that transition out there anyway. So, I think that data is just a way to help us be more efficient, faster. And so I think it's going to be, I think in 5 years, this is how everybody's going to be doing it.
All right. Well, thank you, Davi. Thank you, Charlie. It was great having you both on. And as I mentioned, this recording will be available to you in a little bit later this week, or early next week, so that you can watch it again, get some more ideas. But other than that, I'll give you all a few minutes back in your day, and have a good rest of your day.
All right. Thank you. Thank you, Davi.
Thank you. Bye.